And one way they do this is providing banknotes that make it hard to counterfeit money, and which obviously makes them safe. They also run the UK's electronic payment system so that customers can pay with a card easily. And they also just make sure that the banks are run well. And so they keep an eye on financial companies and banks. And they also create the rules of how these banks should be run. And they basically enforce those rules. If banks end up going out of business, the Bank of England makes sure that the customers and the taxpayers are okay. Their last main function is to keep inflation low. Keeping inflation stable is important to have a strong economy in the United Kingdom, and they have a target of 2%, which they've shown to basically keep the economy in good shape. And when they run into issues of inflation, they are able to get back on target by adjusting interest rates and also communication strategies such as yield curves. Or actually, if I could go back a slide, there we go. Yeah. And an example of a function that the Bank of England would do is to introduce an interest rate hike. So if the UK's economy is doing well, it could cause rising inflation, which would then cause unemployment due to high salary demands of the employees. And this would then lead to reduced customer spending. So then the MPC could then implement an interest rate hike, which would then slow down the growth and create better value for the British pound. And that would lead on to having a more stable economy. And the exact opposite can be done when the economy is not doing very well. So they can go a different route and cut interest rates and employ asset purchasing programs. This would allow people to borrow and contribute to the economy while also encouraging businesses to take on more investments and hire more people, therefore lowering unemployment. So the Bank of England also acts as the official gold reserves custodian for the UK and other countries as well. It's pretty crazy. They actually hold approximately 3% of all the gold that has ever been mined in the history of the world. And currently that's over 400,000 gold billion bars, which is valued at $142 billion. Another big advantage of having a central bank is allowing it to be a lender of last resort. And that means commercial banks who are in cash shortfall or they're having panic withdrawals, they can go to the Bank of England for support. So instead of having that bank go bankrupt, the Bank of England can help out that commercial bank, which would then bolster the economy. The Bank of England obviously is a central bank and not a commercial one. So their customers include the UK government, other central banks, and financial sector firms. They provide the government with near credit risk-free wholesale pound sterling facilities. And they also provide the pound sterling as a global reserve currency. And this supports both the financial stability aims and the financial stability aims of their functions and the tools of global financial stability through the operational network of central banks. And their goal is not to be competing with these other central banks. So, and as said before, they are not going for profit. And the Bank of England also issues banknotes, and they actually have the monopoly of that in England and Wales. And the Bank of England is only one of 8 in the world that is authorized to issue banknotes in the UK. And the way that the Bank of England operates is by looking through a lens of statistical analysis and research. So when the MPC, for example, comes to their decisions, they talk to a lot of people, including academics, experts, and policymakers. They pull in a lot of data to see what the best move should be, and they really use data as to drive decision making. They do use a lot of analysis like this, but they also talk to businesses and local companies as well. And some examples of where they would gather data from is from banks, credit unions, insurers, and mortgage companies. The bank is funded through charging firms with a fee, or when the bank is working with the Bank of England. They also invest the money and capital that they make. They provide banking services, and they also charge for the cost of creating those banknotes. So in conclusion, the Bank of England is the top financial and monetary authority in England, or in the UK. They guard the well-being of the economy and financial system, and they implement economic plans, they issue banknotes, they set interest rates, they govern the British pound, and they execute monetary policy.
All right, so next we're going to talk about financial market infrastructure. So we're going to start kind of goes in from the last section. So the financial market infrastructures, it's supervising financial market infrastructures. It's an integral part of the responsibilities of the bank. There's three separate ways that they can supervise. One is through recognized payment systems. The next is central security depositories. And the last is central counterparties, or CCPs. So we'll get into all of them. Let's see the first one. So recognized payment systems. So these are specified, it's a specified system to receive payments for goods and services. So as we see in the picture, the alternative investment market is a way that you could do it. This aims to help smaller companies in the United Kingdom to access capital from the free market. However, it's more of a speculative and risky market. So that's the reason that they go into it and regulate it more, because without the regulation, then a lot of people could get busted for fraud or money laundering, something like that. Next is central security depositories. So this is a system of buying equities and bonds, as well as electronic access to items of shareholders. So this is important because it's mainly online and doing things electronically. So it's a little more sketchy in terms of whether you could get hacked or whether something could happen to your computer, rather than just an easier function that's regulated more efficiently. So trading is quite easy. That's why they must be regulated. They're very immediate. Like I said, they're electronic. So once a transaction happens, then it immediately goes through. So there's risk in doing that. And again, like we saw in the last section, without regulation, it'd be easy to commit fraud or money laundering, because you could move massive amounts of money from an account to an account with no regulation if the bank wasn't there. So the third one is central counterparties, or CCPs. So these are essentially an insurance policy for trades. So the bank has a program, guarantees consumers will receive money for a completed trade, even if one side defaults. But again, it only guarantees if the person is a part of this program. To get into the program, it's not too hard. You just must notify the Bank of England of your proposal to become a part of this program. Then they'll do a background check, make sure that your funds can come from places, and then they can more easily validate who you are. It's considered the best way to limit fraud of all three of them, due to the program, because once you're in the program, they know who you are. They'll back you if something wrong happens, and if you do something wrong, it can go back against you as well. So next we'll shift to how the Bank of England was during the COVID-19 pandemic. So it was obviously a troubling time for everyone across the world. But the bank decided that they would shift their laws and regulation to try to combat the stagnated economy. So they try to do things. I think maybe Kevin said earlier how they changed the interest rates to go up when the economy is good. So in this case, they changed to go down. So it meant cheaper loans for businesses and citizens, people around the country. And it was less of a hit on the businesses due to all the closures and things that happened in 2020. So here we'll look at the official interest rate of the last 15 years. Interest rate was cut down to 0.25% on March 11th, 2020, which was just at the very beginning of the pandemic. So then a week later, once they got even more of knowledge of what was going to happen in the pandemic, went down to 0.1%. Since then, last November, it raised back to 2.5%, but it's still low. As you can see here on the graph, it used to be a lot higher back in 2006, 2008, in that range. But then because of the housing market crash, the interest rate drastically changed and has stayed the same way for about 15 years before now coming back. And then even then, we're still fairly similar to what it was back in 2009, 2010. And an interesting thing to note is that the rate hasn't been over 1% in the last 10 years. So more about COVID. Here's what the bank did to help with businesses, both big and small, during the lockdown. So first, they split them into two separate groups: the big corporations and the small, the medium-ish size businesses. So the first one is big corporations. These oh shoot. The bank paid off the debt for the company. So a lot of big corporations rack up lots of debt, have to do a lot of different things. So the bank helped them pay off their loans to other people that were in need. Obviously, everyone was affected by the pandemic, so everyone needed money in certain places. And a good example is the Tottenham Hotspur Football Club. They decided to furlough their staff. Liverpool did the same, and they had since gone back on their word. But it meant the government was helping pay the wages for the non-playing employees. So people like the stewards or the people, the ushers, different things around the club, they were affected a lot. The players still made the same money from the club. But it was a large decision because Tottenham's a multi-billion-dollar company or club. So they caught a lot of flack from fans and people around the world for being a multi-billion-dollar company and still needing to take money that the bank could give elsewhere, but keeping it for them and for their staff instead. Comparatively to the small to medium businesses, it was mostly like a trickle-down approach. So like I said, they allowed the banks to, or the big corporations to get their debts paid, and then hopefully that by paying those debts, it would go to the small and medium businesses. They also gave money to local banks and building societies for them to distribute money as well to the local small businesses in the areas. But it was at the discretion of the local bank. So in some cases, they were going to have businesses that were failing, that they wouldn't give money and they would continue to fail, while some would be failing and given money enough to stay afloat. So it was a two-sided coin, but it seemed like the right decision to make sure that everyone had their fair share. So also the Bank of England reduced the amount of capital needed to that the banks need to set against lending. So this means like, instead of setting X amount of money to set against lending, like it says, you could take that X amount of money and put it to the small businesses or the medium businesses, things so that other businesses and the economy would stay stimulated. Overall, the plan generally worked. Some small businesses failed. It wasn't the worst plan, but wasn't the best. Bank of England also agreed not to pay dividends in 2020, and you could only accrue dividends in 2021 to allow banks to focus funding on the smaller businesses. It also allowed the banks